We've been thinking about you because you did put your flag in the ground and you expressed your concerns about volume risk and margin risk, services, the whole thing. And yet momentum remains. And I wonder, you are taking your price target up a touch. Are you getting a little shaky on your legs here?
No, look, I mean, I think there is a momentum call that is extremely strong right now. The flow of funds into the stock has been at a very unprecedented level in a very short period of time, partly driven by split, partly driven by retail. And some, our title of our note today was, is it FOMO, MOMO, or TITA? And we sort of think that momentum is the factor that's impacting it the most. We speak with a lot of long-only investors who are not particularly inclined to chase the stock over here, given that they didn't like the stock $100 or $200 ago. And then when you think about the alternatives, there are companies that are growing at a faster pace, that have good free cash flow profiles, that have higher margin structures, that are trading at valuations not very dissimilar from Apple, so or even cheaper in certain instances. So we stand with our valuation call that the risk gets even more elevated at these prices. So it's a risk-adjusted return that we look at. And I think from a risk basis, there are still a lot of risks out there that we worry about. So our conviction on sort of the fact that these risks are only becoming incrementally higher is unchanged. At the same time, we acknowledge that the momentum sort of can trump near-term valuation concerns on any given day.
Right. You do say that you believe momentum can cut both ways, given the risk, in your view, to the September and December quarter estimates. So when is that earnings forecast curve going to start to come down, in your view? When will that risk become more visible?
I think as we get closer to the launch of the iPhone. So as we head into the launch of the iPhone, I think there will be sort of the biggest unknown at this point is really what the ASP on the new devices is going to be. So you can play it out different ways. I mean, if the ASP is higher, I think that creates some pressure on the stock, frankly, because we've seen that the price elasticity of demand is quite significant. And a time like this through the pandemic, I think raising prices would be pretty tough to do. I think if you're flat with a higher bill of materials, that can be problematic as well. That puts pressure on gross margins. So the only sort of net favorable outcome could be that if there are lower prices now, then obviously Apple would have figured out that the elasticity of demand is going to overcome the gross profit margin pressure, and you'll still get more GP dollars. Again, that also says that they're walking down their price umbrella, and I think that creates some concerns. So either way you slice it, I think as you go into the launch event, you got to be cognizant of the fact that the only unknown over here at this point is really the pricing on the iPhone. Apart from that, I mean, obviously, there's bundling around services and other things that can come to fruition, but we think that the Apple launch event is the one that's going to create like the first catalyst, and obviously earnings. And we'll see how much Apple bought back in stock as well, right? So they are price sensitive to valuation. And I think that buying stock at 300 versus 500 is very different. And now on a split adjusted basis at 130 versus 100 would be quite different.